I'm gonna start trading soon.
Nice. Let me know if there's anything that I can help with.
And kind of divorce, let's
Mm.
say.
Oh, I'm so sorry about that.
Yeah, no, nothing. But I'm gonna focus on studying more, so
Sounds
I'm
good.
gonna be fine.
No worries.
I will
There's
have more time now.
yeah, there's no rush.
Yeah. Hi, Mariby.
Hello.
Can you guys confirm if you can hear everything well on YouTube, please? I just started it.
Wait, what did you say? Sorry, I lost you on
Can
that one.
one of you guys confirm if you can hear everything on YouTube fine? I just started it.
Let me go check real quick.
Perfect. Cool. Thank you. Alright, we're gonna go ahead and get started then. I'm gonna skip over to the next day. We already did Fridays. And then we trade Mondays, so that's what we're gonna skip over to. Thanks. Got it. And I'm gonna skip to, well, first of all, let's take a look at news. So it's all low impact, so we're gonna skip over to 6 o'clock since that is when we will be on the markets. Give me 1 second. I just gotta send the link to a few people, they're still asking. Okay, cool. Perfect, we can get started now. Alright, so we got to 6 o'clock. We have news, low impact news coming out. And then tomorrow we have some high impact news coming out, which is consumer confidence stuff. So I'm expecting for the most part just purely technical moves today then. A quick, easy start to the week. Before we go ahead and get started, we need to delete our previous analysis. And then start new. Make sure there's nothing else here. Okay, cool. Now starting off with a new weekly candle forming, so it's only been Sunday's Asian session so far, so we don't have too much to work off of. So we're gonna mark off the current highs and lows that the price is making, but also figure out what's the range, looking at our previous weekly highs and lows. So for example here, you had price push all the way to the upside here, reject that, and then push back down. As of right now, this candle is bearish. So what we're going to do is mark off that little bit of a top wick. That way we know that if this candle flips back up above this area, it's going to be bullish, and we're looking for potential wick fills here. And then looking for any seller's pressure, obviously we want price to continue breaking its own low. And looking at the range, I'm just marking off the top wick rejections here, so around 39 to 44. Or if you want to do right on top of this wick rejection, almost closer to 300 level. That's the level that we're looking at the moment. Basically, what I'm looking at is to see if price is simply going to make a bottom wick here, flip back up, and then continue pushing bullish after grabbing some liquidity. Because for many weeks, we have just been consolidating this area until last week is really when we closed above it and continued that bullish momentum. Rejected some buyers up top there, and that's where we're sitting at the moment. You come onto the daily time frame, so you've had that massive seller's pressure from these all-time high levels. The last daily candle on Friday closed out bearish with a little bit of top wick, a little bit of a bottom wick, but not too much volume in the body, as you can see. With the new daily candle, you have price making a top wick, breaking the previous highs, Push back down, also broke the current lows. So we're sitting at pretty much volatility and indecision in the current daily candle. You come down to the 4 hour time frame, you start to see the volume die down just here a little bit. So what I'm going to do is mark off a zone, and I'm basically saying that if price can continue pushing bearish from here, then we have those continued sells to come all the way down here and drop into these levels. I'm going to narrow that in a little bit because we're going to need that on lower time frames. For any buyer's pressure, we need those highs to continue breaking to the upside. So you're going to create a zone to the upside here too. To the upside right there. It doesn't really matter, how wide your zone is, as long as you're able to identify and narrow in the price action. And you're going to adjust this as you drop down to lower time frames too. So here, for example, what you can do is either flip it right here and you say that, okay, this is your actual consolidation. So if you're looking for any sort of trades, you're going to look for, either range to range. And if you want a continued, like a scalp turned into a day trade or a swing trade, you need these zones to be broken. But by the time, let's say price taps into this area, because we're sitting up top here, you're going to be looking for sales coming down here, for example. By the time price taps into this, you want to be trailing your stop loss, you want to be taking partials, etc., managing your trade. If price was down here and you're looking for buys, then you're looking for buys coming into this range. Same thing, by the time price taps into this, you're looking for a bullish push and taking some partials, trailing your stop loss, moving to break even. And then by that point, by the time price taps into this zone, you're pretty much sitting risk-free. Come on to a 30-minute time frame. So you had that bearish close right into that area. So what we're looking at is historically we have seen price kind of just ranging in this area, but then once it breaks above, there's a ton of volume in either direction, right? So that's what we're watching out for, making sure that we're not taking a trade right when price is tapping into one of these zones. And we're going to continue narrowing this in as much as possible too. So as of right now, we know that based off of even the 15-minute that there is some bearish pressure here. We're not going to drop down to the 5-minute time frame yet, because usually 5-minute you're testing the volume. So we're going to try to get as close as possible to that 630, which is the New York Stock Exchange open, and then see if we have some volume closer to that. The next news that's going to come out from US is going to be the home sales. So we can wait until pretty much New York Stock Exchange and then look for an entry then. So skipping the 15, you come right into that area. We're just ranging out here. Not much has changed. And then you can also skip on the 5. So even within that 5-minute time frame, you had that candle push to the upside, rejecting to some of these minor consolidation right above the zone, came back down, closed bearish. The new one starts forming, bit of a top wick, but this is where we're seeing most of the reaction at the moment. So what you want for any sort of buys or sells is, for buys you would want this candle to close bullish and the next one takes you to the upside and you look for that buying opportunity, place your stop loss somewhere down here. For any sells, you want this candle to flip back down, close bearish. Ideally, you would want these lows to be broken, so then you can take an entry on the following candle and it brings you to the downside and you place your stop loss up to the top. Any questions so far? Cool.
What do you pay attention to when the spread is like that?
I usually just pay attention to more of the candlesticks, but then I use the spread to figure out where am I going to place my stop loss.
Oh, okay.
So right now it's wide. If I were to take an entry on this candle here, for example, instead of placing a stop loss like somewhere right above this, I would probably place a little bit of a wider one up to the top. So since we're already breaking the lows, that one closed bearish. Perfect timing for that question too. I'm going to place it right up top here because the spread is pretty wide, or else I would have placed it, somewhere closer here. And then let's say TP, you base that off of 15-minute. So we'll manage as price breaks below this if it taps into it, but I'm saying like final TP somewhere around here, the lowest that price has already been to so far. And then just confirm this. Potentially right around here. So I'm using these candle body lows for the stop loss, and then I also see that there's a bit of a rejection here. So that's the area that when you drop down to the 5-minute time frame, that price is reacting off of. So I'm just placing the stop loss a little bit above that. And you can adjust your TP. So if you see that there's more volume coming into the market, you can adjust your TP and bring it down even lower. But your stop loss is pretty much the area that you're most comfortable with, that if price reverses above this, then you know that's going in the opposite direction. So you're not going to adjust that. We only have a penny lot, so we're most likely going to be trailing stop losses and doing that stuff instead of closing out partials. You can't close out partials here. So right now we're still up like 6% of the total account.
This is a continuation of yesterday's?
This is a continuation of whenever we started the account, like a couple of weeks ago, yeah. I think we started this last month. I'm going to hit next bar just for sake of time, but we also have New York Stock Exchange open here in a couple of minutes. Alright, massive seller's pressure to the downside, but we still came back up and closed above this area. So as long as we're not breaking these previous highs, we can continue pushing back down bearish, but it's a matter of pretty much volume at this point. And then you also have the next news, which is coming out in 30 minutes, which is new home sales. And then an FOMC member speaking. Let's do next bar. Alright, we closed above that area once again, but breaking previous lows, and we still respected the previous highs here. So I want a candle closure below this. If that happens, I'll move to break even, and then I will also increase my TP area.
You answered the question I was going to ask.
The TP adjustment?
No, the stop loss adjustment.
Oh, okay.
Like, I'm always asking myself, since my lots are small too, I can't take partials.
Yeah.
I'm asking myself, like, at what point do I adjust my stop loss so that I'm risk free, but then also I give the trade enough room to essentially breathe.
Yeah. So you got to pair that up with where you are in the market session. If there's a lot of volume coming out during that time, if there's any news that's coming out, and then also the higher time frame, like technical or price action analysis. So if we break below that zone, this 4-hour candle is also going to be bearish and keep pushing. And that's pretty much the point where that zone is, where that daily candle is also flipping back down bearish. I want to see how this candle closes in the next few minutes, and then we can adjust, because that will also be the close of the 15. Ideally, what you would want to see, if you want to look for a second entry or anything like that, is a bearish candle close below this, and then the next one makes a top wick to grab liquidity from here, and then continue pushing down, and that's how you know that you're going to have a longer term trade. Alright, you gotta close below that. What I'm gonna do is move to break even and then take profit. I'm gonna increase that. Alright, coming on to the hourly, you pretty much have this clean move coming down. I'm gonna check 30 minute. and then 15. So how about coming right around here, and then we can continue increasing from there. So the reason why I haven't placed it right at this level here just yet is because we're taking it pretty much in small increments. You still have this entire little consolidation, even though we have narrowed it into the core consolidation. You still have this entire area that price needs to clear out and continue breaking the previous lows for that bearish pressure continuation. So the way that I would look at it is price would need to do something like this. So you have this last low, price came up, retracement, broke that low, came back up a little bit higher, consolidated out, right? And then we would need that low here to be broken. Given that there's really no high impact news, I would want to see some sort of a retracement here once again, and then a continuation down. So we're just going to take it in small increments instead of just increasing our TP all the way. And we're still in that high volume time frame anyways. So 15 minutes until news comes out. Are you not worried about it being above a support level and price keeps rejecting support? Do you have a rule regarding how many candles can reject a level before you manage? If you're talking about this area, not particularly. So the reason why that we took this entry was because price was rejecting, we're doing that zone to zone trade, so that's how it started off. Price was rejecting this area. It had resistance being formed here, tapping into this previous consolidation area here to the left. We're taking advantage of the high volume time. So this is pretty much around the time when New York Stock Exchange opened up. There tends to be a lot of volume. And as price continues breaking below this, we saw that there's continued bearish volume and bearish pressure as previous lows are being broken. So as soon as this candle closed below this, that's when we had managed the trade. If I had anything bigger than a penny lot that was running on this account, then I would have taken partials. But we can't do that, so I just trailed, or I moved to break even. So then it was a risk-free trade. But there's no rule on how many candles can reject a level before I manage it. It's just purely based off of a candlestick. Yeah, so Danny asked, are you not worried above it being at support level and price keeps rejecting the support? I'm assuming that he's talking about this level, that price keeps rejecting this and then price, potentially reversing. So that's what I just explained. Alright, 8 minutes before news. You can check different time frames as well. So now we have cleared the previous lows here, rejected all of that, but again, news is about to come out. Ideally, we would want to see some sort of a top wick here and then a continuation down on a 15 or 30 minute time frame. So that means obviously that 5 minutes can be breaking this short-term bearish structure too. But we care more about the higher time frames if we're looking for a longer term trade. 5 minute is purely for volume. So you go on to the 15. You got the 30. 30 is also breaking the lows. The 30 also made that top wick already, and it's continuing back down. But also notice how much more volume that we have in this 30 minute, right? And that's because of the New York Stock Exchange. The 1 hour time frame breaking the highs and lows, but we're still continuing that bearish pressure and keep pushing down. And then that 4 hour kind of set up a sort of a break and retest here. And you check the daily is also pushing back down bearish. So far we have all the time frames in our direction to keep pushing. Alright, so now you get a deeper pullback, new hourly candle. You have the news coming out. So new home sales, we're pretty much around the same exact level as the previous. We're expecting that there were going to be more. So we're kind of just tapping into this area, a retracement. You go onto the 15. The last 15 closed like a doji, rejecting all these sellers. And then now we have that bit of a top wick. So that's that volume that we needed to come up and create that top wick. So top wick or a candle comes up a little bit higher and then continues pushing. So as long as we're maintaining that bearish structure, and we have already broken the previous lows, so we're not too worried in that sense either. You come onto the 30-minute time frame, 15-minute time frame, and we start to see how price is breaking its own low, right? So it keeps tapping into the bottom wick and it keeps extending it further down. So that's your confirmation of that continued bearish pressure. If you hadn't taken an entry there, this could be another potential setup where you can place your stop loss somewhere above this zone here. So you got a 5-minute close. And we've already had so much volume. And the hourly also, after breaking out of that consolidation, a bit of a top wick, and it keeps breaking its own low and keeps pushing down. Any questions on this so far? This is a purely price action and technical setup entry. Not your typical break and retest that we usually do, but more of starting off with a zone-to-zone trade and then continuing that trade out. And we'll go more into this type of stuff next weekend anyways, when the boot camp happens. We're going to go through all these strategies too. So we're maintaining that resistance right below that area, and we're still closing below that, and that's pretty much all you want. I'm just skipping through just for sake of time because we're just hanging below that area here. So even here, came back up a little bit deeper, made that top wick, but still came back down and closed bearish. So that's how you're testing volume, and you're trying to check, which way you have more of the pressure. Right now, it's obviously a lot more of the bearish pressure. So once again, if you're looking for an entry, this would be more of your ideal setup, and then placing your stop loss somewhere here.
I think that's the entry I would have probably taken. I'm not used to taking it all the way up there.
Yeah.
I'm not gonna lie, I think I would have probably said no trade zone right there, too, in between.
This entire thing?
Like between the two blue rectangles?
Yeah, right here.
Yeah, to me, it would have been a no trade zone.
Mm-hmm. Because of the consolidation?
What was that?
The consolidation, because of that?
Yeah, that's what that would have led me to think.
Yeah.
So it's interesting, it's like refreshing to see, like, being taken from that top.
Yeah, so it comes down to your different strategies. Like for us, we usually do impulse and break and retest, but these are different strategies that you can test out, especially when you're back testing and you're journaling your trades. So zone to zone trading, or people do just simple support resistance, supply demand, or any other basically different type of strategies. But it all comes down, I guess, to just really understanding the candlestick anatomy. So once we clear that, I'm going to trail my stop loss right above this candle. Because once we clear that, we're also creating a new low. Yeah, so you can wait for your price to break out and come back and retest. That's perfectly fine too. And ideally, those are the setups that you would want if you were swing trading or day trading and just looking for a longer term trade with, minimizing your risk exposure as much as possible. I prefer those kind of things in my trading as well when I'm looking at 1 hour, 4 hour time frames when there's not much news coming out that week. And there's higher impact news that's going to come out the following week, or units a week after high impact news. Pretty much market conditions when there's a lot of consolidation that's happening throughout the week. So I wait for break and retest on higher time frames. A specific level, so not like, a basic setup like that, but potentially as price keeps pushing, a retest of it, and then, or something like that, like a retest of that, and then a continuation down. Any formation of break and retest. Alright, I'm going to do next bar. So we tested into the previous area, we haven't cleared it just yet, so I'm still waiting. Yeah, so like zone to zone trading, or just testing the volume on some of the lower time frames could be something that you can test out, Danny, with scalping. Alright, so we have cleared that. We are going to trail our stop loss. So pretty much what trailing the stop loss is, I'm pretty sure a lot of you guys already know, but if you don't, I'm bringing my stop loss lower below my entry because this is a sell. So if price flips back up, I know that I'm still going to get out profitable. Not as profitable if I were to get out right now, but I'm giving price enough room to make any highs and lows or retest into specific areas before continuing back down. So if you're looking for buying opportunities, you're going to trail your stop loss above your entry. So this is still a guaranteed win. It's just that we're not paying too much attention to the monetary aspect of it. We care more about the percentages. And that is something that's going to help you a lot more as you continue to grow your account, because we started off with a $1,000 account, but if you're trading like a $5,000 account, and I know that some people also do like the funded accounts and things like that. So if you have those bigger accounts, if you pay attention to the monetary numbers, it's going to really mess with your entire trading psychology a lot more, because those wins and those losses tend to be bigger values, versus if you only look at your equity percentages, it becomes a lot easier when you're trading regardless of your account size. Alright, so we do clearly have volume as we keep pushing. Around this time, you only have about another hour or so until the New York stocks or the New York and London overlap closes out. So London session is going to close out. You're not going to get too much volume after that point. So I wouldn't really be managing my TP any further. I would just keep it at the level that's at, and then just come back the following day to look for more opportunities. I would probably be off the charts in the next 30 minutes or so, realistically. You guys cool with me skipping through to see what happens here?
Yep.
Cool. Alright, you kind of got a bit more consolidation for the rest of the session, but once again, that's because there's no news coming out. Your next news is in the next 7 hours or so. So you wouldn't be trading or looking for entries right now in the market. You'd pretty much be done with whatever entries that you have already taken. And you can look at this on higher time frames too. So like even on the 30-minute time frame, a lot of bearish pressure, and then you got that break and retest, and then push down, creating new lows, and then you come back up just to retest into these previous areas, not really breaking the previous highs that have already been formed, and then we're already breaking the previous lows here again. You come onto the hourly, same thing, a lot of bearish pressure, and then finally we get a bit of a retest, but now we're trying to see if we can continue pushing back down. Alright, so you would have your TP hit pretty much towards the end of New York session. So London, New York overlap was already closed a few hours ago, and now your trade would have been closed as well. So we were up 6%, I believe, when we started the session, and right now we're sitting at a 17.41% increase overall on the account. We can also take a look at the stats for our account so far. So far we're up with $174 on the account. We start off with $1,000. We have taken 8 trades since the start of the account. You can take a look at the graph, and equity increases overall. So we're going to start next week on Friday with basically a continuation of this. So we're going to start with Tuesday's session, and you'll see me like skip through and all that stuff as well to the New York session. That would be consumer confidence that we're going to trade, and that's the only high impact news that's going to be coming out in the US session. So we're going to continue this next Friday, and then that weekend, next weekend, is where we have the Forex Bootcamp, where I'm going to be going a lot more into detail about entries, exits, risk management strategies, fundamental analysis, market sentiment analysis, and technical analysis. So you guys still have time to sign up for that. We have 9 spots that are left. You can sign up through the sharpenfx.com website. If you guys have any questions, let me know. But I'll see you guys next Friday then. Have a good one, everyone.